Welcome to the Accountability Show. We've got a brand new episode today where we are talking about reading a financial statement. In the Accountability Show, if you haven't watched before, what we tried to discuss is at least a topic. We talk about the what, the why, the how, and then we have a real life example of that topic. And these topics that we're discussing in the Accountability Show right now are 12 steps in order to lay a strong accounting foundation for your business, because there's certain mundane tasks that you have to do every single month, every single day, and records that you have to keep, and bills that you have to pay, and activity that you have to record in the order to lay a strong accounting foundation for your business. And what's interesting is this accounting foundation for your business, the black and white, these forms, the W-9s, the 1099s, the payroll tax returns, all of these things that you have to be doing and preparing and creating every single quarter, every single year. All of these seem like, what in the world am I doing? Why am I staying in compliance for this? Well, if you have been watching the news lately, you've seen that COVID-19 and the coronavirus have had an immense effect on the financial world. It's had an immense effect on the economy, and that effect has affected your small business. And the small business owners that have been the most successful getting these PPP loans and the fundraising and any additional loans, Main Street lending, EIDL, the Economic Injury Disaster Loan, the business owners that have been the most successful, that have gotten that money the quickest, are the ones that practice the mundane tasks. They're the ones that have executed these 12 steps that I'm talking about in the Accountability Show. They've done this over and over and over, year after year after year, and so they had the information readily available. When you have the black and white information available, it will turn into green. It will create money. It will create opportunity. It will create revenue for your business that you really didn't even know existed in your business. So the opportunity for you to grow your business and to expand and to use other people's money, like I hear so many people talking about, the first step in using other people's money is being able to prove to them that you can use their money and that you can pay it back. And the way to prove to them that you can use your money, their money, and pay it back to them is having a financial statement. You've got to have the black and white to prove your track record, because without this, you don't have a track record. If you don't file a tax return, the banks don't know that you've made money. If you don't have a W-2, you can't prove that you've got regular income. So the things that we're talking about on this show, while they might be boring, while they might seem like something that, that's just to stay compliant, that's not important, I don't want to invest in that part of my business, bullshit. This is what is going to create your business. This is what's going to allow you to grow your business. And I want to reach out and strangle people that think that this is something that's not important, and it's something that they need to go on the cheap with, that they don't need to invest in a professional relationship. Oh, I can just do that on my own. I'm doing it on my own for now. I'm doing all right. No way. You're losing opportunity. You're losing out on future revenue because you don't have these financial statements, and you can't expand your business because you don't have a banking relationship. So to begin with, the what? What is a financial statement? When you hear somebody talking about a financial statement, what they are referring to is a balance sheet, an income statement, and a cash flow statement. That's what financial statements are. When a bank is asking for you to apply for a loan, when you're applying for a loan with a bank, they're going to ask you for a financial statement. They don't want just your profit and loss, which is another name for an income statement. They want your balance sheet as well as your income statement. Now, the thing to remember about a balance sheet is the balance sheet is a picture in time. A balance sheet consists of the balances of your accounts, all of your accounts. Well, Jonathan, how in the world do we have a balance of our income statement accounts? Well, the balance of your income statement accounts is retained earnings. You've probably heard of retained earnings, or you might have heard the term members' equity. So that is the accumulation of all of your earnings over the life of your business. So the balance sheet is an actual picture, like a picture. I'm looking up at a golf picture that I've got. That was a picture in time. The balance sheet is always a picture in time. And so that balance sheet only changes when time changes. So you might have prepared a personal financial statement. That is basically a personal balance sheet that shows your net worth. On the balance sheet, you have different categories. You have assets, you have liabilities, and you have stockholders' equity or equity. And you need to remember this equation. Assets equal liabilities plus equity. Assets equal liabilities plus equity. This is the beauty of accounting. This is why I love accounting, is because it always balances. There's always an answer. Now, sometimes it's not as easy to find that answer, but because accounting works in a balance, there is always a way to come down to a final answer. And no matter what happens in the present or what happens in the past, with accounting, you can always go back and correct it. There is always a way to find a correction. There's a way to reconcile. There's a way to amend. And in life, there's ways to reconcile and there's ways to amend. It's not always a very fun experience, but it can be done. And that's what I love about accounting. So your balance sheet is always a picture of your activity in time. Assets bring future benefit to your company. Liabilities are a future obligation to your company. Now, you want more future benefits than you want future obligations, and that yields equity. When I say that yields equity, what I mean is when you have more future benefits, assets, than you have future obligations, liabilities, then you have more equity in your business. And the idea of starting a business is to create cash flow. Cash flow yields equity. So the way that the income statement and the balance sheet work together is the balance sheet is a picture in time, and the income statement is the activity that happens within those two pictures in time. I enjoy playing golf. I love playing golf. The beauty of golf is that it's one hole at a time, one shot at a time, and no matter what happens, you have the opportunity to get yourself back in the game. And it's all up to you. So in golf, you start on the first tee and you have a score of 0. That's your beginning balance sheet. You're on the first tee, you haven't even swung the club yet. You hit the ball. What happens in between the first tee and once you get that ball in the hole is basically your income statement. It's the activity that happens in between 2 points in time. And once the ball goes in the hole, let's say that you got a par on a par 4, that means that you had a 4, your score was 4, your balance sheet at the end of that hole would say 4 on it. Now, the activity that happened in between there is your income and your expenses. Did you gain a shot or did you lose a shot? Your income is revenue that comes into the business for services or products that you are providing. Your expenses are the expenditures, the money going out that is used to generate the income. And that is over a period of time. Your income statement is only over a period of time, like a quarterly income statement from January 1st to March 31st, or from April 1st to June 30th. That would be your second quarter. It is a period of time. So the thing to remember when you're putting together a financial statement is that the balance sheet is a picture in time and the income statement is a picture of a period of time. Now you might be looking at me going like, what in the world? Like, why in the world am I watching this? This makes zero sense. Like, what in the hell is he talking about? Watch it over again. It's very important as a business owner. The most successful business owners that I come across understand balance sheets and income statements. They understand the financial side of their business. They've taken the time to really learn it, and they spend time with their accountant actually learning this. They take advantage of the mundane task. This mundane task of your financials is going to separate you from anybody else in your industry. When you know your numbers and you know how to make decisions better, in order to make an educated decision, not a guesstimate, it's an estimate. And the way that you're able to make this educated guess is that you have numbers to support exactly why you're making certain decisions. We know now in our business that every email that we get, it's an additional $720 to our bottom line. Do you know what that number is in your business? Have you broken down the amount of revenue that's generated from the amount of leads that you have in your business? If you do, that is awesome. I congratulate you. I really appreciate you watching this show because you actually understand the importance of knowing these numbers. If you don't, you're missing out on an opportunity to really understand how your business works and what really drives the needle in your business. Reading financial statements and creating financial statements is an essential part of the foundation of your business, because if you don't know where you've been, you have no idea how to go where you want to go. And the financial statements are your map to get you to your financial freedom. They are your map to reach your financial goals. They are your map to tell you this business is not worth being in anymore. Sometimes pulling the plug is the best financial decision that you can make because you're in the wrong vehicle and it's not producing enough for you. The only way you're going to know that is by reading a financial statement and understanding how to read a balance sheet and an income statement. Thank you so much for tuning into the Accountability Show. I really appreciate you watching. Go ahead and subscribe to the channel and also turn on the notifications so that you know when we drop a new episode, because this next episode of The Why is going to continue to break down the financial statement and why it is so important for you to be reading your financial statements and producing them each week.